back. Day 7. Let's get into it. Oh, here we are on the charts today. Today is actually November 1st, day after Halloween. I tried making this video already, but I didn't have enough time, and then I started partying, and then I was actually drinking in the video. We're just gonna forget about that. Yesterday was pretty good though. I made $500 in profit on the day, putting the funded account back into profit for that. So that was pretty good. I don't know, I think I made, I don't know, somewhere around there though. But finally back into profit after those first few days of kind of shitting around. So today's video topic though is not about my previous trades, because I also can't even get onto NinjaTrader right now because it's the weekend and Rithmic doesn't let you get on the weekends. You should never trade with Rithmic actually. But here, today's topic though is related to a bunch of how exactly I was trading yesterday, and if I even had access to the charts anymore, I would show you like where I had failed all my trades. Like I had failed a lot in here, and then the ones where I won were of course during trends, big trends, or like occasionally during like a range. I would get like the very bottom of it, you know. But what I want to talk about today is the concept of the different modes that a chart or a market can exist in. So, hold on. Yeah. So this is all about determining the market mode, which is basically is trending or ranging. All right. And this is integral to knowing when to enter trades and when to not enter trades, and how to use volume levels on Bookmap. You need to be able to identify whether the market is trending or ranging. But first of all, what do those even mean? And to do that, I want to first of all draw a little something and be like, question mark, question mark. Yeah, like we have no idea. We're stupid. Don't worry, I'll tell you. That's why you watch these videos, right? No one watches these videos. I watch these videos back though. I just talk to myself. It's pretty fun. I want to introduce the fundamental concept of fair value. All right. Oh my God. Yeah. Oh, I don't know how to type on this Windows anymore. What is it? What is fair value? And I'll just say fair value. It's a fundamental concept that it's defined by the price at which the most amount of trade can be facilitated. So I'll write that down. Ooh. It's facilitated. Sound out my words like a fifth grader. And to give you an example of this, you have to, I guess, I'll look at a ranging market. Say here. Alt J. See, look at this. This right here is a ranging market. You see price goes up, down, up, down, up, down, up, down, up, down. Breakout, break of structure. That's like your textbook range structure with like the sweep and then the break in the opposite direction, and the like price comes back up into here, into the bottom, touches this volume level again. Like this is some textbook shit. That's why the trades were good yesterday, because this shit was actually to a T. But here I'll pick up something called a volume profile. Although this account I have on TradingView doesn't even have the actual good ones. Here, I won't do it like that actually. I'll do this. Fixed volume range here. So if I do this, right? What you see here? Actually, no, I'll do it just to here. Yeah, there. So what you see here, this here is all the volume, and then here the biggest one, this is called the point of control, and that is the fair value. right? Price hovers around there. It always comes back to that, comes back to that, comes back to that, comes back to that. And that's just because the most amount of people want to buy and sell. As I talked about, I think in the last video, all market movement is driven by an imbalance between buyers and sellers. So when you have a balance, the market ranges over that. It's not always just going to be a precise horizontal line, because that's not how it works. There's a component of, like, it varies a little bit, but this is how you define fair value. And it's a very important concept. If you see there's a market ranges, something switches in the market, and then fair value changes. People no longer are willing to sell or buy, or maybe too many people are willing to buy, or too many people are willing to sell, where there's that imbalance again. And look, that went up here, as in there were like a lot of buyers, or maybe no one wanted to sell, so price went up. And then up at here, everyone wanted to sell, no one wanted to buy. No one wanted to buy still, no one wanted to buy. And the reason that you like have these huge swings is because market sentiment changes really easily. There's a lot of emotion in the market, and it's hard to really define a lot of like how market moves in rigid frameworks. So you kind of just have to use things that approximate it, like a volume profile. And this is fair value right here. So if you know what fair value is, then another thing I want to introduce is here. I came up with this term, modal inertia. Ooh, that's a good one. And what I mean by modal inertia is the tendency of a market mode to stay in that mode until acted upon otherwise by fair value. Okay, now is it starting to click a little bit? If we come back here, we range until something changes, and then we trend until something changes. This could be part of a bigger range. No idea, really. I mean, if we scroll out on the 1 hour, this introduces something else. I want to find like a 1 hour range. Something that's like, I better yet, I'll find a daily range. Yeah, we've had some chop these past few days. It's like this. All of this. Like, again, we go up, down, up, down, up, down, up, down, up. And you can also look at it for this. Look, you have your fair value right in here. So really, what this is, it's just a way of saying, yeah, like, markets are going to behave in the way that they're behaving, and that you should trade with that idea in mind, even though you know, okay, the market will change at some point. Like, you can't range forever. It will start trending. You could try and predict that, but that's not the way that I trade. The way that I trade focuses more on, why did I put these so high? Focuses on finding out what is happening right now, finding out how that is evolving based on how the market is reacting to it, and then to get in on that, assuming that the pattern continues. And that is how you can catch trends. When you see things like a range breakout, then a retracement, that's kind of the beginning of, of a trend. So you're going to be like, oh, okay, we were ranging. I saw a sweep to the top, then a breakout down. Now it's a retracement. It's more likely that this trend down leg is going to continue than re-enter this entire range. So enter, and I tried to enter a few times, but then I got stopped out here, entered here again, boom. Did 2 trades in this leg, actually. And I mean, that's what you gotta do. What else was I gonna say? Yeah, I mean, if that's confusing, probably watch more videos on like fair value and how that works. But you want to be able to identify what is going on. And what's important is also here on the 5 minute, like this could look like a range, right? We'll just label this right here. But if you go into the 1 minute, you'll find that there's like a lot of action. There's like trends here, trends, and a retracement up. So what you have to realize is that you need to look at different time frames, and if you're looking at different time frames, you'll be able to have an idea of what actually is happening in the market. Are we at fair value? Are we looking for fair value? Because that's what a trend is. It's just you're looking for fair value after it's changed, and you don't know it. And then price might come back to where fair value was before. It has a tendency to do that as well. Definitely read more up on fair value, because honestly, like, there's no secret to getting good at trading. You have to just put your time in and learn as much as you can about the markets, and eventually you start internalizing it, and then it's pretty cool how different like a chart will start to look to you, like when you do that. It's pretty bonkers. So put the effort in though. Like, read books, watch YouTube videos, subscribe to the channel. Why not? I'm teaching y'all everything, if anyone watches these videos. But yeah, I mean, that's how you find trending or ranging, how you determine that. And I mean, that is pretty much like the gist of this. Like, if you know that, then you can move on to the next bit, which is really the most important part. And this will be, here, let me make another one of these. There we go. Volume levels are, I'll say this, how you use volume levels on Bookmap, and just levels in general. If you're looking at charts, if you don't have access to Bookmap, how you use volume level, I'll just say levels. Levels changes based on whether you are in a range or a trend. All right? And so what I mean by this is, if I'm going to look here, I see this trend starting to form. Say we're like here. Okay, this is midnight. You wouldn't be trading this actually. You see this range starting to form. It's over. You're trading after hours, so you're kind of expecting a range. You would label these levels where price is, or you'd see the levels on Bookmap, and then you'd expect price to always respect and to always like test that and then retreat from it. You wouldn't expect breakouts, or if it does, you would expect a quick back in. You know what I'm saying? Like, you would not expect price to break out of this. And when it does break out, that's when you know something's going kind of weird. All right? Like when shit comes all the way up here, that's, a sign that, oh, maybe the market mode or the regime is changing. So how you use levels changes based on whether you are ranging. In a range, what you want to do, I'll write this. In a range, use levels as boundaries, and use levels as boundaries. I don't know what else I was going to say. Use levels as boundaries that price stays in between. And with that in mind, that means like price comes up here, price comes up here again, price comes up here. We are not going long because we are in. And then we're gonna, like, I don't know, target whatever you want though. I normally do like 6 tick stops, so like I do like 2, 3, like something like this, and like probably like on this bearish candle, enter. What could that do? I target for 5s normally. Yeah, like things like this, or like price comes down here, you see this level is being very well respected. And this does have the caveat that you will definitely lose. You will lose when you see things like, oh, price comes up here, and then we see, look at this. If I was taking, I definitely would have taken this. If I was trading, if this was like during market hours, price is coming up here, has like a low wick, has a long wick, and then has a bearish candle after that, I would be thinking, okay, time to enter. But again, it's all about volume. I wouldn't just enter on charts alone. If you do that, you're a brave soul. and you're probably not going to make much money. But maybe you're really good at it. Everyone has a different way of trading. I just do what works for me. So yeah, in a range, use levels as boundaries, but price stays in between. And then in a trend, which we have over here, use levels as either a target or an entry. And what I mean by this is you won't really get them on this much unless you're looking back here and you like label things like this. Or you like label that, you know. That works for sure. As you can see, these levels both got taken out and a reaction happened off them showing that they were valid levels. But what you want to be doing here, I have too much stuff on the screen right now. Okay, so here, looking at this trend from earlier, or this range, goes into this trend when the day starts. And with this downwards move, we have this. And now, because of this, I'm not quite bearish yet. Because, I don't know, the market just opened. Like, I have no idea. I would expect maybe a retracement into this bottom of the bounds. Value area low right here. As price comes back up, maybe I would want to long that because this is a lot of points here that you could definitely take advantage of. Then once price would get up here, that would be when I'm using this target as an entry, or this level as an entry. Sorry, not target. But it really just depends on time frame. I want to stress that. I really want to stress that. You can use something as a target if it's on the 5 minute, or if it's on like 15 minute, then also use it as an entry for your next trade if you want to go the opposite direction on a short. So what I would do here, I would already set up my trade. Okay, so I'm going to enter when we come to the bottom, and then I see like some shit going on that tells me to be bearish. It's like seeing these two, I would probably be like this. Or no, I'd react off of the volume level that I do see on Bookmap. I don't really enter off of charts, but again, it's Saturday, so I don't have access to Bookmap right now. Pretty rough. But I would enter somewhere off these highs, and then I would be targeting these levels from before. But in reality, the Bookmap levels that I'm given using volume, because those are more reliable. Oh my god, I love that program. But yeah, that's about it for this video. Pretty much, when you're trading, you want to determine whether you're trending or you're ranging. And then whether you're trading or you're ranging, whether you're trending or you're ranging decides how you're going to use volume levels. And whether you're going to enter at volume levels or whether you're going to stop out at just past them, whatever, or use them as targets, whatever. You know what I'm saying? My mind is falling asleep. I gotta go party again tonight. It's already 8:30. But I'll get this out, and I'll see you in the next video. Deuces.